Hello, hello, hello. This is Alicia Castillo Holley. Welcome, welcome, welcome to the Ask Me Anything About Funding. This is great to be here. It is great to be here. It's a superb spring day in Silicon Valley, California. So you can submit your questions online on our website, Women Get Funded, on Facebook, on our Women Get Funded fund page, or you can send us an email to ama@wealthing.com. Every first Tuesday of the month at 2 p.m., remember, we have a meeting right here. We're going to record it and we're going to put it on Facebook and on our closed group. So without much further ado, I'm going to start with our questions here. The first question, how do I get started? To get started, you need to find your funding needs. You need to establish what it is that you need. And one of the main challenges for people that have not done any training in business is to understand financial statements. We have some basic understanding of what is an income statement, but you need to know your numbers. So you need to know what an income statement is, you need to know what a balance sheet is, and you need to know your cash flow. And the cash flow defines the needs for cash to pay for resources. Now, there's another way to use resources without paying for that, and that is called unfunding. And we're going to cover that in the class. Unfunding, for example, is when you have sponsorships or partnerships, or when you have pre-sales. Is this only for new companies? No, absolutely not. If you need resources to grow your company, you can have different types of funding mechanisms. One of the things that small business owners struggle with is get the resources that they need to grow their business. So running a small business is very expensive. Can I get investors in Silicon Valley? Well, this is a hard question because I am in Silicon Valley, so I invest here. And the short answer is, if you are in Silicon Valley, you are in a great place to raise funds from investors, not necessarily venture capitalists, but also angel investors and super angels. If you are not in Silicon Valley, then you can come here, but it's really difficult because no investor likes to invest in something that is very far away. So you can either move the company here, move the commercial area here. But if you're going to come here, you need to be prepared. This is a very, very expensive area. But really, you need to have some traction wherever you are. And sometimes it doesn't make sense to come here. So think about getting funds locally. There are many, many great ways to fund your company locally. And I'm going to tie this to another question. I have lived in several countries and I have raised funds in several countries. So the fundamentals of raising funds are the same. There are slight variations, and there's some small legal and social issues. There's countries, for example, where charging interest is not appropriate. So you do have some small variances according to the different countries. But in my experience, you can raise funds in any country of the world, or you can use resources without raising funds, which is unfunding, which is I really, really like. Let's see. Question number 4. Is the program only for women? And this is tied to question number 17. What happens if my husband is also in my company? So this is not a program limited to women. I run these programs for other people. There's just a couple of things that are a little bit different for women. I also have a book, How to Find Your $1 Million Idea. It's on Amazon. I'm launching a new version at the end of the year too, including cryptocurrency as a way of raising funds, which is pretty cool. But this is not just for women. Only that I saw when I moved here, I saw that very, very few women apply to get angel capital. And they were underprepared or badly prepared. And sometimes raising funds from an angel is not your best option. And sometimes you're not ready, or sometimes you're past the point. And sometimes it is better to get a loan than to share your equity. So it depends. And I want to transfer that knowledge to other women. Have you raised money? Yes, I have raised money. I have raised money. Probably the largest amount was to create a VC fund. I created Chile's first seed capital fund that was private. I also raised money from the government. I raised money from families and friends. I've invested as family and friends co-founder. I've invested my own money. I ask for long-term loans, short-term loans, lines of credits. I use credit cards. I use partnerships, sponsorships, partnering, crowdfunding. I have not used cryptocurrencies though, because they're pretty new. But I've used pretty much anything that you can imagine. So there are like 47 types, and I've used them all in different countries. So that's how I know that they work. And I am now an investor in 4 micro VCs. Micro VCs are venture capital funds that have less than $30 million. One of them is larger now, but I invested when they were small. I'm also a partner in a large construction project. And yeah, I've done a lot of fundraising in different capacities. So I know what to avoid and what to do. Oh, this is interesting. What are the main differences between men and women? I live my life thinking there's no differences. So whether there are differences or not, I think they're irrelevant. One of the narratives that I want to change is the thought that there's something outside of my control that I cannot change and would have an impact in my capacity to do things. Because I don't think there's anything outside of my control that limits what I do, what I can't do. That's what that's how I live my life, and that's how I got things done. So I don't think there are a lot of difference between men or women in terms of raising capital. There are some numbers that show that women get less funded than men, but we have to control for the type of businesses. Women receive less amount of the overall capital, but the deal term, the investment deal for a woman is higher than the average investment deal for a guy. And when there's a woman and a man, they raise more money and they lower the risk. So this is part of all this diversity, pro-inclusion movement. It's economically more sound to have diversity in your team. So that is something that we've seen. My late friend Julie Weeks noticed, if you have a company and the company is classified as a woman-led company, and the company starts to grow and you start receiving new investors, the only way that you can maintain that the company is women-owned or women-led company is if you establish the gender of your investors. So a lot of companies are successful and they continue to grow and they raise more money. And they started as being women-led businesses, but as they continue to grow, you know, we're gender agnostic. We really don't care where the capital comes from in terms of gender, and we shouldn't. We don't want to discriminate if somebody is a male or if it's a female, or maybe it's something in between, or it's tall or is short or is old or young or skinny or fat or black or blue or white, or yellow. We don't want to discriminate against that in terms of capital. We want wise capital in our business, so we can't account for that. So the notion of having women-led businesses it's somehow limited. So we need to change that a little bit. How much is this program? This program is $499. How do I apply? We do not have the application process open. The application starts on May 15th. So you can apply after May 15th. And we have a selection process. Are there scholarships? Yes, there are some scholarships. Our sponsors take care of their own scholarships. So we will let you know. You do not have to pay when you apply, but you need to apply first. What happens? Is this only for the US? No, this is not a program for the US only. I lived in several countries. This program applies to any situation where you need to raise funds. There's different sources of funding that are ideal to your particular need. And there's ones that are farther away. So it's like you don't want to give a 5-year-old a license to drive a car because they're not ready, not because they will never be ready. It's just not the right match. So it works pretty much the same. There are no angel investors here. Please help me. There are angel investors everywhere. The fact that you do not know how to approach them, how to find them, how to vet them, doesn't mean that they don't exist. I cannot help you by giving you a list of angel investors. I can tell you how to find them, how to deal with them, how to stop dealing with them if it's not convenient, so you can do it on your own. How do I contact you? You can contact us on our website, womengetfunded.com. That's our ideal way of communicating. You have a contact form there. You can contact us on Facebook on our Women Get Funded page. I don't want to lose my house. Can I still get a loan? There is no reason why you need to put your personal property as a collateral when you have when you are requesting a loan. So if you're going for debt has to satisfy 2 criteria. One criteria is the collateral, which in your case, you're thinking is your house. And the other criteria is your capacity and intention to pay back. So lenders don't risk their money. Lenders have to manage other people's money. Therefore, lenders should not be taking risks. If your company doesn't have the assets to qualify for a loan and the cash flow, the future cash flow to qualify for a loan, you're not fundable by debt. You can use some credit card, and there's some bridges that you can use to make yourself fundable by debt. But if you think you're gonna lose your house, what you're actually doing is you're mixing 2 types of funding. You're using your asset, which is your house, to generate cash, which is your equity, so you can put your cash in the business. So at the end, you are risking your house through the cash that you put in the company. The company is not taking the risk. So you are assuming the founder's risk. And if you understand that way, in our second session, we talk about the funding mindsets. If you understand that way, you're much better prepared to define how do you want to use debt or not. Is it true that women raise less money than men? Yes, it is true. It is true. And not only that, women tend to take less risks. My PhD supervisor, Dr. John Watson, is an expert in gender issues and debt. He wrote a fantastic book. We have an interview with him on our YouTube channel. I will put it on our Facebook page and on the newsletter that I'm going to send you. And this is what happens. Women tend to be more conservative about taking risk, but they're more practical. And I remember there was a time where I had a business with 9 partners that were all guys. And I was being very practical about the equipment that we needed to buy. And they went over and they bought the most exuberant tables, and the desks in our office was gorgeous. And I thought, well, we don't need to buy that because it's very expensive. But they thought we'd need it. So that's when I was talking to John Watson about that, that was kind of one thing that kept coming up. Oh yeah, you know, I'm much more rational about spending money. But that might not be true. What is true is that the return on investment is much higher for women because we tend to spend less money. What is also true is that our rate of growth is also slower because we tend to spend less money. So we tend to be more conservative in terms of spending. Because of that, we tend to ask for less money. So if you separate that and you say, well, this money needs this amount of resources or cash to run, it doesn't matter who runs it, because this is what the money needs. And that's why you need to understand your cash flow. Am I too old? You can start and run your company at any age. How do I know I'm ready? You know that you're ready to ask for funds when you cannot continue to move because you need resources. You need the resources to continue. And that's when you know you're ready, because you're at a point where you cannot continue. Now, you need to put some of your risk in. It is not reasonable to expect others to take a risk when you are not willing to take a risk. That is not just limited to women, that also happens to men. If you're waiting for somebody to fund your company to change from your job to be an employee of the company, you're not really taking a lot of risks. So you need to manage that. You need to put some of your risk there. And the other question is, I have a great idea, but I'm afraid somebody will steal it. How do I protect it? Well, intellectual property has 4 pillars. There is patents, or how do you do something? There is trademark or brands, or what is the image that you want to convey that you have been working to create in the customer's mind. There is design, or how something looks, or a software is a design as well. There's copyrights, or how do you describe a story, and they are property secrets. So property secrets are not really shared. That is how you protect your intellectual property. But the value is not in the idea. The value is in the execution, in showing resilience, in changing and pivoting and struggling to get through. It's not about starting to go. It's about keeping the system. That's where the value is. So nobody's going to steal your idea for 2 reasons. 1, because nobody can do it the way you can. And 2, because most people are not interested in developing other people's ideas. Also, I don't think you need to dispel all your secrets. People are more interested in knowing that you will be able to deliver. And there are ways to establishing that trust. Most likely, you get that trust by showing that you've done that in the past and by the way you conduct yourself professionally. So that's how you build that trust. For example, if I say, I'm going to do a company in clothing. I've never done a company in clothing, but I've done companies in other manufacturing processes. So I will try to tap into those experiences and prove that if I could do that there, I could do it here. So that's kind of how it works. But most people are not interested in stealing your idea because they just want to get their money's worth. They don't want to get a job. So you're the one who has to do the hard work if you want to get funded. And we're getting very close here. The last question that I have is, can I use Kickstarter? Kickstarter, for those of you who don't know, is a crowdfunding platform. There's many others. There's Fig, Idea, Idea.me, GoFundMe, crowdsourcing, Indiegogo. So these are platforms that allow people to trust your idea and to give you a little bit of money or a lot of money for your ideas. Last year, 2 years ago, they changed the laws in the US so you can be an investor. It's called the Jobs Act. You can be an investor in a company by putting a little bit of money, and you don't have to be a qualified investor. Traditionally in the US, you have to be a qualified investor to fund certain types of business. Well, crowdfunding or the Jobs Act abolished that. So you can have a lot of people putting in a little bit of money or pre-buying, pre-purchasing from you and getting the cash that you need to run a company or to run a particular project. It doesn't have to be a company. You can just do a project. My friend Sumi, she started a crowdfunding campaign and it was not doing well. She stopped it. She went back to the drawing board. She re-studied her campaign. She got Virgin from Richard Branson supporting her. She won several prizes, and then she had the presence to go and raise the funds. And I think she did raise around a little bit over 900,000 pounds, which was much more than what she expected. The beauty of crowdfunding is that you can use it as pre-sale, and if you use it as pre-sale, you make your funding needs disappear. That is unfunding, so you don't need the money from anybody because you already have pre-sold that. But you also have crowd investing. So crowdfunding has two areas, what I call pre-sales and crowd investing. So if you have crowd investors, what happens is you have hundreds of investors that put a little bit of money, and then you need to manage that. It's like a micro IPO. IPO is an initial public offering, but you don't have the liquidity. So you have shares in this company. You have a little bit of shares in these companies. You don't have any control over how the company works. But when the company wants to continue growing, you have to satisfy those investors. So depending on how you want to grow the company, this could work and it could not work. I ran 4 crowdfunding campaigns. 2 have been a complete failure and 2 have been very successful. And one of the companies that I invested in, that I'm a board member, we raised over $500,000 in a crowdfunding campaign with a combination of pre-sales and investing. And it was better for us than raising more funds. So there's in the chat here, if you want to add questions, thank you very much. You're very, very welcome. I'm so happy that you're here. This is a great program. It's very close to my heart. I want to see more women running their amazing firms and being role models for everybody. As a customer, I want to buy more from minorities, not necessarily women, but I just think entrepreneurship is the way to make the society grow and invigorate, and it's a great concept. I really love it. So remember, if you know somebody that would benefit from this course, please send her our way. We want to see her here, whether she's ready to apply or not. We want to answer as many questions as we can from funding. I think funding doesn't have to be a stressful process. I think you can be invigorated. You'll learn a lot. I love it. I just love it. So thank you so much for being here. We would love to hear from you. If you have any comments, any questions, please let us know. We want to make this much, much better. And thank you for waiting all this time right to the end. When you go to Udemy, go to Women's Program for Raising Funds, And you can use this code to get the program for free. Remember, there's only 5. And the code is Ask Me Anything, all capital letters. Thank you so much. This is Alicia Castillo. We are offering answers to your questions on funding for our program, Women Get Funded. I hope to see you again next Tuesday and the first Tuesday of every month between 2 and 2:30 California time. Goodbye from Silicon Valley. Thank you for being here.